I'm hearing some financial advisors offer a cash value life insurance, aka whole life insurance, to build up enough dollars for the eventual income-driven repayment tax bombs. I smell BS from a mile away, given that I can make much higher returns with Vanguard with much less fees. My friends think the cash value returns are guaranteed at 5%. What do you guys think? Holy crap, somebody is doing a lot of selling here. First of all, you do not get 5% guaranteed returns on cash value life insurance. If you look at the guarantees, what you will find is you will have negative returns for the first 5 to 15 years, and then typically low returns up to about year 20 or 30, and then moderate returns. The guaranteed returns, if you hold on to a whole life policy bought today from age 30 to age 80 or 85 or so, you will see that they are guaranteed at about 2% a year. They are projected at about 5% a year. And until you've held on to that thing for 30 years or so, you're not even going to be close to that 5%. And so there certainly is not a guaranteed 5% return. You'll be doing well if you get 5%. I'd expect 3 or 4% on a policy held for 50 years starting today. But, this is not a great place to put money that you're going to need for an IDR tax bomb in 5 or 10 or 15 or 20 years. You can definitely make higher returns in more traditional investments. Well, I guess I can't say definitely, right? There's no guarantee. Maybe the market melts down and we have a 1930s kind of situation. But boy, I'll tell you which way I would bet on that one for money that I need in a relatively short period of time. So no, I don't think a cash value life insurance plan is a great place to save up money for an IDR tax bomb. Bear in mind, I don't think IDR forgiveness is a very great option for most doctors. I mean, this is like a desperation option for people who have, student loans that are 3x, 4x their income. This is really, you're in a terrible debt to income ratio when you're starting to consider getting the IDR forgiveness. And the reason why is that, it takes 20 to 25 years of payments to get IBR, pay, repay forgiveness. And that forgiveness, unlike public service loan forgiveness, is fully taxable. So what would typically happen is you make payments for 25 years, and then you end up owing a tax bill that's about the same amount as the debt was originally. So this just isn't a great way to go unless you're in a pretty desperate situation. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
My dad, your host, Dr. Dolly, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.